This is the market structure shift using ICT concepts. Today I'm going to be showing you exactly how to identify a market structure shift using a simplistic approach. You'll never need another video on this concept. I'm going to make sure of that, so watch this all the way through. Now, what is a market structure shift? A market structure shift is a break above a high or a low, indicating whether price is bullish or bearish. So if we look at these simple examples right here, we have a high here, we have a low here, we break above that high. This is a bullish market structure shift. On this example, we have a low here, we have a high here, we break below that low. This is a bearish market structure shift. Now here's the key, so make sure you pay close attention to this. The key to identifying a correct market structure shift. A break is defined when a candle's body closes above or below the body of a high or a low. So that might sound confusing, but if we look here at this example, you see we have the wicks delineated by the wick, the arrow pointing to the wick, and we have the body of the candle. The body is the bulk of the candle, the wick is the outside of the candles. So if we look at the key to a break in market structure or a market structure shift, is defined when a candle's body closes above or below. So in this example, if we're looking at a bullish market structure shift, all we need for a market structure shift is for the candle body to close above it. So if we look here, we see this green candle and this red candle. This green candle closes above the previous candle's body, but it does not close above the wick. So it is only necessary for it to be a market structure shift if price closes above the body, as we can see here. And I'll just draw a line out so it's easier. You can see this next candle closes above the body of the previous wick. So if this red candle was our high, this green candle broke above the body of that high, then that is a valid market structure shift. Now I'm going to show you guys an example of where this happened recently on price action chart. This is on ES, and a trade setup actually did play out. So remember, break a market structure or a market structure shift is when a candle's body closes above a high. So if we look where our high is, well, we have several highs. We have a high here, and a high here. We'll just mark this one out. So remember, if we break above a high, that's a bullish market structure shift. So do we get a break above this high with a candle body close? So remember, when we're looking at this high, we're looking at the bodies, not the wicks. So this is why I draw the line out with the body. All right. Now, do we get a valid market structure shift based on these concepts? Well, if you see here on this green candle, we close above this high with a body, candle body close. So that is a valid bullish market structure shift. And as you see, we have this fair value gap here, which price retraces back into and reacts off of. Now, if this green candle closes how it is right now, then that would also be a valid bullish market structure shift, because this is our high right here. We mark out the body. If this candle closed right now, that would be a valid bullish market structure shift. It's really that simple. Now, I'll show you guys one more example on the bearish side. We see we have a low here. Remember, the low is defined by the bodies, not the wicks. So we draw out the low. Do we get a valid bearish market structure shift? This black candle breaks below this low. The body closes below that low. So that is a valid bearish market structure shift. So yes, we do. It is really that easy. This is a better way to use the market structure shift, is using the bodies instead of the wicks. Now remember, a market structure shift is a break above a high or a low. A break is defined when the candle body closes above or below the body of a high or a low. So make sure to screenshot this if you haven't already. If you guys like this video, make sure to subscribe, and I'll see you all in the next one.